The Illiterate Investor's Guide to Building Wealth. Consider that one of the greatest barriers to building wealth is not a lack of money. It's not a lack of education. It's not a lack of opportunity. And it's not your age. The greatest barrier is the belief that wealth is reserved for others. People with degrees. People born into money. People who understand complicated financial language. I know this because I once believed it myself. I left school before completing my education. I arrived in North America with almost nothing. No financial training. No investment experience. No roadmap. For years, I worked hard. I washed dishes. I parked cars. I worked long shifts. Like millions of others, I believed that hard work alone would eventually lead to financial security. I was wrong. Most people learn a straightforward formula. Work hard. Save money. Retire someday. However, this approach has a flaw. Hard work creates income. It does not automatically create wealth. The distinction is important. Income is what you earn. Wealth is what you own. Income stops when you stop working. Wealth continues to grow, even while you sleep. Many high-income earners live paycheck to paycheck. Many wealthy people live modestly while their assets quietly grow. Once I understood this distinction, my perspective changed completely. I stopped asking, how can I make more money? And started asking, how can I own things that make money? This single question transformed my life. When people hear the term financial education, they often think of university degrees. In reality, financial education means understanding how money works. You do not need anyone's permission to learn. You do not need a professor. You do not need expensive courses. The best investment I ever made was not in stocks. It was in knowledge. I dedicated countless hours to public libraries, reading books, studying investors, learning about businesses, understanding markets. The remarkable thing about knowledge is that it cannot be taken from you. Markets can crash, jobs can disappear, economies can change. However, what you learn remains with you for life. Knowledge compounds in the same way as money. One of the most important principles for building wealth is straightforward. Pay yourself first. Most people prioritize paying others before themselves. They pay the landlord, the bank, the government, and the utility companies. Only then do they save whatever remains. Often, nothing is left to save. Wealthy individuals take the opposite approach. They save and invest first, then spend what remains. Even starting with just 5% of your income can make a difference. The key is to begin. The habit is more important than the amount. Building wealth is not a one-time event. It is an ongoing behavior. Albert Einstein supposedly called compound interest the eighth wonder of the world. Regardless of its origin, the principle holds true. Compounding occurs when your investments begin generating returns. Those returns, in turn, generate additional earnings. This cycle continues, leading to exponential growth over time. Initially, growth may appear slow. Progress can seem minimal in the early stages. However, over time, the results become significant. Growth accelerates substantially. This is why time is more important than timing. Investing modest amounts consistently over 30 years often results in greater wealth than investing larger sums over just 10 years. Starting early makes the investment journey more manageable. The best time to plant a tree was 20 years ago. The second best time is today. Most investment mistakes are not mathematical. They're emotional. Investors tend to buy when market sentiment is optimistic. They often sell when fear dominates the market. Emotional responses such as fear and greed have caused more financial losses than actual market downturns. When prices increase, many assume the trend will continue indefinitely. Conversely, when prices decline, there's a tendency to expect ongoing losses. These assumptions are often incorrect. Successful investors develop emotional discipline. They maintain a long-term perspective. They remain patient throughout market fluctuations. They focus on underlying value rather than reacting to headlines. The market rewards patience far more than excitement. One of the greatest financial secrets is surprisingly boring. Spend less than you earn. Not for a month, not for a year, for decades. Many people spend money trying to impress people who do not care. Bigger cars, Bigger houses, more debt, more financial stress. Real wealth is often invisible. It is not the luxury car. It is the investment account. It is not the designer watch. It is the ownership of productive assets. Financial freedom comes from the gap between what you earn and what you spend. Protect that gap. Invest that gap. Allow that gap to grow. Assets generate income and increase your financial resources. Liabilities take money out. Wealthy individuals focus on acquiring assets throughout their lives. Businesses, stocks, real estate, royalties, intellectual property, income-producing investment. In contrast, the average consumer often accumulates liabilities over many years. New cars, consumer debt, expensive gadgets, items that lose value. Consider each dollar as a resource that can be put to work. You're responsible for directing how your money is used. Will you use it to purchase something that quickly loses value? Or will you invest in an asset that generates returns? This decision will shape your financial future. Relying on a single source of income carries significant risk. Employment opportunities can change unexpectedly. Industries evolve over time. Technological advancements can reshape markets. Successful individuals recognize the importance of diversification. This applies not only to investments, but also to income sources. Consider the benefits of earning income from multiple sources, such as a job, dividend stocks, a business, a book, digital products, rental properties, royalties. Each income stream serves as an additional pillar supporting your financial stability. The objective is not to work harder indefinitely. Instead, the aim is to develop systems that consistently generate value. Employees typically trade their time and labor in exchange for monetary compensation. In contrast, owners focus on developing systems that generate value. However, adopting this perspective does not require everyone to establish a business. Instead, anyone can cultivate an owner's mindset. Who constitutes the target customer base? Does the product or service address a genuine problem? Is there potential for sustainable growth? Once you adopt an owner's mindset, your perception of money fundamentally shifts. You cease to view items merely as products. Instead, you begin to recognize opportunities for value creation. You move beyond the role of a passive consumer. You transition into the role of an investor. After several years of studying financial systems, I arrived at an unexpected conclusion. Wealth does not represent the ultimate objective. Rather, the true goal is personal freedom. Money serves as a means to an end. It is a particularly powerful instrument. Nonetheless, it remains a tool rather than an end in itself. The purpose of wealth is not merely the accumulation of numerical figures. Its primary function is to generate opportunities and choices. For example, it enables individuals to spend more time with family. It also facilitates the ability to assist others. Additionally, it allows for the support of meaningful causes. Ultimately, wealth provides the means to live according to one's own values and priorities. Financial freedom can therefore be understood as the freedom to make autonomous choices. This objective is, in my view, worthy of pursuit. You do not need a degree to build wealth. You do not need perfect timing. You do not need to be born rich. You do not need to understand every financial term on Wall Street. You need curiosity, discipline, patience, and a willingness to learn. Remember this: the greatest investment account you will ever own is your mind. The greatest asset you will ever control is your behavior. And the greatest opportunity is the one in front of you today. Start small. Stay consistent. Keep learning. Because wealth is not built in a day. It is built one decision at a time, one habit at a time, one investment at a time. If an investor without formal education can learn to build wealth, so can you. If you found this video helpful, please subscribe, like, and share it with anyone interested in improving their financial future. Until next time, continue learning, investing, and building your financial freedom.